Bitcoin is awake, with one of its most volatile weeks in a very long time. Coinbase, though, makes the news again for their new Base chain, and we give you an update on the spot Bitcoin ETFs, of course, with the potentially new Ethereum future ETFs. We discuss all this right now in Collective Shift's weekly recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes. We'll start with the market update with Matt, followed by the ETF and Coinbase news. So Matt, what does the market look like?
Thanks, Leon. As you touched on just there, more volatile week for Bitcoin, Ether, and all of crypto in the last 7 days. We've been waiting for a while, saying flat prices, and we finally got a bit of change. So past 7 days, Bitcoin down 11%, ETH down 10%, and we saw some more heavier selling during the week, but we've corrected a bit. So at the moment, Bitcoin is 26,000 and ETH is 1670. The cause for the real heavy selling was really what's called a long squeeze. So a few of our listeners might be familiar with the short squeeze, which is more, I guess, heavily discussed in crypto because it's almost the reason why prices go up, where short sellers have to buy Bitcoin or ETH back off the open market to close their positions. A long squeeze is just the complete opposite of that, which kind of caused prices to cascade down, reached all, you should see on the chart there. I think we got into the 25,000 area for Bitcoin for a brief moment, and for ETH, I think it very briefly went under 1600. So it was a very, very sharp sort of sell off, late last week, and we've more or less steadied since then. So we were waiting for that price volatility to come, and it finally did come. So that long squeeze was quite a significant one, being one of the largest or the largest long sort of liquidation of longs and some shorts since January 2022. So a very long time there. Around the same time, there was some discussion about other maybe secondary reasons why the price was sold off. There was some reports about SpaceX selling some Bitcoin, or at least writing down the value of the Bitcoin that they hold in their balance sheet. That sort of came out not too long after all these prices. So it was these price crashes. So it was a bit of people starting to look for an answer and maybe cause some more selling. Evergrande as well, filed for bankruptcy. That's one of the large sort of real estate companies in China. And there's been just continued, fear about sort of the Chinese real estate sector in general over the past, well, particularly sort of the last week. So that again almost created some more fear in the market. So that's a big watch for the coming week with response to, well, seeing how the Chinese sort of government responds to how it takes care of its real estate sector, which many sort of economists and market commentators have been sort of putting under the spotlight for a while now as a potential just watch and see sort of event. So that's in the state of the markets. I suppose it's good to have some volatility for people who are long-term investors. They might be happy to take up some more accumulation in sort of the past few days. For other people, it's more just riding it out. But it's good to see something other than a very flat week, which has been becoming the norm of late.
Yeah, that's right, Mike. It's actually been good to have some excitement in the market back here again. And for those who weren't aware, liquidations is when someone doesn't have enough money to cover the bets that they're making, and so they have to go ahead and sell that position, and that does cause the market to cascade down. But of course, Evergrande FUD as well. This has been happening for 2 years now. Nothing new in the market. We're all aware of this. I'm sure the Chinese government are very aware of the Evergrande issues going on. So let's leave it at that, Matt. Thank you very much for covering the market for us every single week. We do appreciate it. Now let's go over to Nick, our resident senior research analyst here. So Nick, I know Coinbase has recently been in the news. They've been in the news a little bit over the past couple of months. What's new with Coinbase, and what's all this new fuss about?
So there were two main things that got Coinbase in the news this week. One was their approval to sell crypto futures in the US, which was kind of a landmark bid by the CFTC, which regulates the commodities sort of area in the US market, especially because Coinbase has been wrapped up in a lot of court battles, especially with the SEC. So this was seen as a big win for Coinbase because they've been trying to get these licenses for years now, and it's kind of a good step forward. But they still have a long way to go with trying to overcome their current issues, which are more related to offering securities and staking services in the US by the SEC. So that's just such a landmark case that even some little positives, I think, can be taken as a good step forward. The other major one here was that Coinbase's On-Chain Summer, which is an event launching their new Ethereum network, has kicked off and really got a lot of good traction. They had a lot of big names such as Coca-Cola, who are sort of coming in with their NFTs, which I think had some pretty landmark sales with a lot of success and a lot of minting. So that's showing that I think Coca-Cola finally has got some success selling NFTs on Coinbase. And I think the overall, I think, theme here is that their new chain is proving to be very fruitful and with a lot of demand because these things can actually make revenue the way they operate. So it's actually showing that its chain is actually quite profitable so far, even though there's been sort of heightened demand because of people perhaps wanting to get in on free mints and participate. But it's just good step forwards.
Yeah, that's good to see that Coinbase, the base chain, is actually performing pretty well so far. And I'm a big fan of it. I've used it only very little. And so far, the experience has been nice for me. And we slowly see the TVL increasing. So Nick, thanks very much for covering that. But I've got a question for you. Like, why is this actually so significant? Why do we care about if Coinbase comes on, right? What's happening?
Just because of, as I mentioned, the landmark case that is happening. But then it's also hard to sort of appreciate that the biggest public company is launching an Ethereum-backed, blockchain, which is, I think, I'm not sure about you, Matt, but definitely for me, being in the industry, it's one of those ones that I'm just so excited to see public companies dive into public blockchains and really align themselves with Ethereum. So for me, this is quite legitimizing as they're, not creating their own blockchain to try and monopolize, or take away users from Ethereum, but it looks like they're actually trying to leverage Ethereum, and they're actually working with developers and the Ethereum Foundation on Ethereum proposals, which is kind of gone under the radar a lot. That people don't realize the vast amount of resources Coinbase has that are putting towards Ethereum development, which is always positive. I think it also shows a bit of confusion as well with the CFTC and the SEC. A lot of different products Coinbase is offering. So I think this could potentially go maybe more fuel in the ammo towards Congress finally creating some sort of market structure in the industry, which I'm just so excited for, and I'm really hoping we see some more clarity.
Yeah, right on, Nick. Thanks very much for sharing that. And it is very bullish to see that Coinbase is helping the Ethereum Foundation and just spur on the community sense in Ethereum. So crypto is not going away, everyone, just in case you hadn't realized so far. So Matt, let's move on to you, my friend. There has been some even more news in the Ethereum future ETF space. We are already waiting for the BlackRock Spot Bitcoin ETF, but now there's Ethereum futures. What is happening in the market?
Yeah, with the Bitcoin ETFs, and now we've got a lot of discussion about the Ethereum futures ETFs. This is all to do with in the US. SEC still has not approved an Ethereum futures ETF, nor has it approved a spot Bitcoin ETF. In 2021, there was a milestone made when they approved their first Bitcoin futures ETF. That was significant, but probably the big sort of milestone that the industry would like is a spot Bitcoin ETF, which, there was a decision last week in respect to one of the applications, and the SEC delayed its decision until 11th of November from memory. The next deadline is for that. We do have a lot more, sort of a handful, 6 or 7 or 8 sort of applications that are coming up for their deadlines at the start of September. So we'll see what the SEC says about if it will approve or deny these. If history's anything to go by, they will delay their decision for these it'll be their first deadline, and that's the expected result. But anything's possible. We might get an actual answer for those. In Europe, there was a spot Bitcoin ETF that did go live. So again, more just signaling just how how in front of a lot of these other jurisdictions sort of are with respect to their lead over the US with regarding sort of the appetite and the level of comfort these regulators have for approving spot ETFs in relation to Bitcoin. For the Ethereum futures, why is this such a big deal? It would probably, if there is going to be an approval by the SEC, it would probably just help legitimize Ethereum or ETH, the native sort of asset to Ethereum. And that would sort of be seen as a big win in the industry because, as I said, the only cryptocurrency so far the SEC has been comfortable sort of approving at least a futures ETF is regarding Bitcoin. So, there's a bunch of deadlines coming up for the futures ETFs again later this year. If history's anything to go by, they will probably announce a delay on that, and we'll get into 2024 where they'll eventually be forced to either approve or deny. So yeah, fingers crossed that this actually does turn into an approval because it would really, really help sort of the legitimacy of crypto at large.
Yeah, Matt, we've actually covered a bit of this news before in some of our previous weekly recaps, but I want to bring it back down to basics for some of the members that might be listening out there. So there is a spot Bitcoin ETF, and then there is like a future Ethereum ETF. So just to break it down very simply for us, Matt, what is the difference between a spot ETF and a future ETF? Can you break it down for us, please?
Yeah, so they're both just sort of instruments, the financial instruments that are owned by a certain issuer of the ETF. And I guess it's like, depending if it's a futures or spot, you sort of, if I go to buy an ETF off one of these issuers, I guess their actions are going to be different. In the case where it's a spot ETF, like for Bitcoin, for instance, if I go to them and I purchase an ETF, a unit of an ETF from them, they will have to then, make sure that they actually purchase Bitcoin either from the open market or over the counter OTC. So to make sure that I guess the balance is always sort of one for one, to really simplify it, versus a futures ETF where they don't have to do any of that because the price of the ETF is just tracking maybe the derivatives of Bitcoin, which are traded on futures markets or whatever. So all in all, it really just affects, I guess, the demand for the underlying. So if it's Bitcoin, if it's Ethereum, we really would like a spot ETF because it would more closely, I guess, reflect the true demand for the underlying asset rather than having, futures ETF, which is, a bit of progress, but ultimately not quite where we want to be.
Right on, Matt. Thank you. Thanks very much for that really high level explanation of the difference between a spot and a futures ETF. I feel like I understand a little bit more about the market space now. So, Nick, I want to go back to you, my friend. So there is some extra news. We'll leave the regulation and we'll leave the spot ETFs at the moment. Nick, I want to ask you about a gaming giant that's actually decided to enter crypto and gaming. I think they're called Zynga. They've probably made a few games that we're familiar with. What's this news item about?
Yeah, so you no doubt may have played some Zynga games before. Like they created a lot of Web2 games like Words with Friends, which is one of the highest grossing mobile games. And back in the day when you had games being built on Facebook like Farmville. So Zynga's a multi-billion-dollar, gaming mobile company, and they're dipped into Web3 gaming by launching their new game, which is called Sugartown, and it's sort of their attempt to first create a native Web3 game to sort of a crypto audience. They haven't released it just yet, but they're going to be releasing it sort of at a later date with the release of about 10,000 different NFTs, and it just really marks the first really stamp in the market for such a big giant like Zynga. He was also behind some other big games, like I think they had a few big poker games that a lot of people were using. But they sound like when some other companies were potentially exiting the Web3 gaming market, that they're still pushing on.
Yeah, it's quite interesting. Like I remember Farmville when Facebook was all the rage back in the day, but now I would never use my time on Farmville, for example. So I've got a couple of follow-up questions for you there, Nick. So do you play idle games, Matt, Nick? Do you guys have any time for games nowadays?
I don't know about you, Matt, but I'm probably the gamer in the pack here because I do love my PC. I'm a bit of a VR fan as well, for those in the team that play along. But yeah, I'm a massive gamer. That's why gaming is one area that I really try and pay attention to, because there is other games that I play that developers are really stepping into the Web3 gaming sector, potentially looking at how they can connect to audiences or even utilize NFTs through mint and burn mechanisms in a way to retain gamers or even enforce like royalties on chain. So it's a big area, and I'm just continue to watch, and slowly by slowly these big giants are dipping their toes in.
Yeah, and Matt, we do actually cover a whole lot of the gaming narrative in the Collective Shift platform. But significantly, particularly to this scenario, what does it mean that Zynga starts getting onto Ethereum to create gaming on Ethereum? Like, what does it mean for the blockchain space in itself? They have a massive user base, right?
Yeah, I think it's just I say it as just another opportunity, like a big opportunity for, I suppose, the value prop of Web3 gaming or blockchain gaming to be explored, and ideally to be help almost validated, or there to be more evidence that the value of a game and how much fun you can have on a game that the users get from it is actually superior to the existing sort of industry. So I view this as another thing to circle, to continue to monitor, if not even try playing it yourself. Because it very well could be, because of the user base you referenced, Leon, if there is success with this game, it could really, I think, either inspire more resources to be invested in it through Zynga, the entity or the parent company that owns it, and even competitors in the gaming industry to maybe lean in a bit more intently to the blockchain gaming space. So that's why I think this was such significant news.
Yeah, I think it is pretty significant, because if they manage to actually spur great innovation and it's a fun game to play, a lot of people will just start coming onto the Ethereum blockchain. And dear God, I hope that the Ethereum gas fees do not spike like they used to. Otherwise, the rest of us will suffer. Thanks, Matt and Nick, on that information piece on the Zynga gaming giant moving into the Web3 gaming. I want to move on to our rapid fire. So anything in the market that's been appreciated, overappreciated, or even underappreciated. So, Nick, I think you have something that you overappreciate in the market this week.
Actually, maybe underappreciate, because to start off 2023, there was a lot of talk about Visa and MasterCard potentially halting new crypto partnerships and stepping back from the space. But from what I've seen, actually, that it's the opposite, that despite the bit of gloomy market and sideways market that we're having, a lot of people are unsure whether, as always, whether this has staying power. It's showing that it potentially does, with MasterCard, I think, just coming out, and they've released a few research reports that actually dived into how to use blockchain to, I guess, move bank deposits on chain, and a way for them to be that middleman to facilitate this new movement towards potentially getting more real world assets on chain. So they come out with a few research reports looking into stablecoins and how the market's evolving for stablecoins. And also Visa, in the last few weeks, we saw that they're testing out how to do gasless Ethereum transactions, or how to subsidize those transactions, how to change the native token to USDC, for example, in these transactions. So big, companies, Visa and MasterCard, potentially seeing the writing on the wall, and this is a technology that has staying power, and that's what really excites me in the market. That despite whatever news headlines we may see, some firms stepping back, from what I'm seeing, it's actually really stepping in. They may not be creating their own coins or own chains, but they're definitely leveraging what's out there and looking at meeting this rising tide.
Yeah, I'm with you there, Nick. Like, it's a long-term view at Collective Shift. And so we keep that 5 to 10 year view at all times. And we see companies still continuing to enter the space, which at the end of it is still bullish for the entire crypto industry. So well said, man. Thanks for sharing that. Matt, I want to move on to you. Do you have anything that's overappreciated or underappreciated you noticed in the market this week?
Maybe underappreciated. I don't think we talk about it too much, so it could be sort of a new area for people to pay attention to. But it's really just the concept of token unlocks. We've done some content on it in the past, the Collective Shift, but token unlocks is just where a project will have 100% of their tokens, which they will announce when they sort of start. Well, typically there's some exceptions. And then they will sort of break it up. If you just picture like a pie chart, they'll break up some for investors, some for community, some for treasury. And then, slowly over the first 4 or 5 years of the existence, they will slowly release them into sort of the open market, and giving the people who receive them, like investors, for example, the ability to sell them. Not all of them will sell them, but a lot of them will. So there's sort of unlocking sort of schedules or vesting schedules where you can sort of track to see when there are some big sort of unlocks that are coming up. So this week, for example, Lido, the LDO token, they're, releasing about $15 million worth of LDO tokens. So nearly 1% of their sort of circulating supply is going to be entering circulation. So we have a few different terms for supply. There's sort of total supply, and then there's sort of circulating supply. Circulating supply being any token that has entered circulation. How does it enter circulation? It's because it unlocks or because it vests. So it's good to keep track of like when some tokens have big unlocks. So Avalanche, for example, has like nearly 3% being unlocked this week. Guild Games, YGG, has about 30% of the token supply has been unlocked, and nearly 7% is being unlocked this week. So there are handy tools out there. I think the probably industry standard is sort of token unlocks, or token.unlocks.app. And some projects like to time announcements around the time of these, just to sort of cushion the blow of any sell side pressure. So it just can be something to look for long-term investors. Like me personally, I don't really pay too much attention to them. But if you're looking for like an entry price, sometimes it can be handy to like see if there's going to be like a big release of tokens, like particularly in quiet times like these where, the prices can move on not much sort of volume, and there isn't really too much like new demand entering the space. So they're just like something that I would like to maybe just put under the spotlight, because I don't see it talked about too often.
Yeah, and if I
just
see
to add in there, Matt.
Sorry, Matt. Sorry, Nick.
Sorry,
you go,
I was going to say actually that. When you look into the acceleration of token prices, when you consider small tokens in circulation that have high VC backing, Lido is one that, if you look at the actual chart, it's increase of like in terms of its token price actually hasn't been as high as its adoption and usage. But then if you look at total market cap and the way that's exploded, once these tokens vest, market cap quickly skyrockets, but token price may not follow. So it's another case of maybe VCs getting in very early and be able to cash out and being able to realize those gains. But if you were to buy the token and later on, you're not seeing that high price appreciation, even though Lido is probably one of the most successful cryptocurrency protocols out there. So it's just important to use CoinGecko or use these charts to look at market cap, think about who's holding them, and even whether they have low float, which is called like whether they come to market with only that small percent, like Matt talked about. A lot of things to consider, and I think they're easy ways to sort of get caught out.
Yeah, and speaking of that low float market cap, we did cover WorldCoin not too long ago, and that is a perfect case example. If you're considering, making allocations in crypto, then at least have a look at the resources at Collective Shift, where we look at tokenomics. It's a two-part series where you get to understand how these tokenomics are actually measured and what it means to have a poor tokenomics, for example. So, Matt, that was a very good actual information you gave us there. So, really appreciate that. And lastly, I'll just share what I thought was underappreciated in the market was Coinbase itself. So Coinbase is in the news for the ETFs at the moment, but one thing I think is underappreciated was how much TVL has actually been accrued onto the Base chain, which is, kind of their layer 2 solution. And it's quite easy to actually bridge over there. You can go ahead and get a Coinbase account and you can withdraw straight away to Base. Let's have a quick look at the TVL. It's currently sitting at about $180 million. It's not close to Arbitrum's $1.7 billion or Optimism's $700 million, but TVL, which is total value locked, which means how much of value is actually, on the chain or moving around on that chain. It's not as close as these other layer 2s, but it is getting up there. It is a new chain, of course, with possibilities, new communities, NFT communities. So there's a lot of speculators out there, but at the same time, you could find one brand new protocol which is only starting their journey and could be making their way up the ranks. At the same time, though, my friends, you have to be very careful, right? Some of these tokens are scams. You have to be careful what you connect your wallet to and what you approve, okay? For example, let's take an example. The top 2 chains, I'm going to share it over here. It's called Base Swap and Based Protocol, or Based Coinbase. Base Swap and as well as Swap Based. They're just pure forks, right? They are just copycats of the Uniswap V2 chain. So really, guys, there is opportunity out there, but I want to urge you to be very cautious. Some of these brand new tokens, brand new chains out there, some of them come out with new tokens that are completely scams because it is quite easy to create a token nowadays, right? Let's have a look at the top 2 ones, which is called Base Swap and Swap Based. So these 2 tokens are pure forks of the Uniswap V2 protocol, which is basically saying they are copies of it. Okay, so there's nothing innovative over there. They're just brand new tokens that they've copied from another protocol. So I'll leave that in your hands, my friends. Make sure you stay the course and you be very safe out there in crypto. All right, I'll leave it there. Now, I think, my friends, that is a wrap for this week. If you're looking for more insights, be sure to check out the weekly Collective Shift newsletter, providing free weekly insights, of course, every Friday. Make sure you subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter. We'll see you again next week.